ready?
Yeah, let's do this. Hello, everybody. It's Bree Milani here with Sky Insurance on the Greatness Podcast. And today I have an amazing guest. I'm so excited for her to be on here. This is Tami Moreno. She is with Envoy Mortgage. How are you?
Great. Thank you.
Yes.
Thanks for having me.
Of course. I know when we talked about this, you're like, wait, this is something that sounds fun that I want to do. And I'm
Absolutely.
like, that's like my point. I want to like get people on here, tell your story, talk about how you got into the industry. I don't know that we've ever even talked about that. So why don't you tell us a little bit about, I know you have kids and your husband, but tell us a little bit about your personal life and all of that.
Oh, man.
Fun stuff.
I do. I have kids. Well, first of all, we've known each other for a really long time.
It's probably been 7 or 8 years?
I think so. And I'm surprised we've never talked about this, actually, about how I got into the business.
I know you used to like do more like processing,
Exactly.
assisting, but I
Yes.
don't think I knew why you or how you got in the industry.
Yeah. Well, first with kids and family. So, yes, I'm married, have a husband, Robert, 2 kids. They're, how old are they? They're 10 and 12.
Oh, no.
I have to think about that.
I have to think about that very often when people are like, how old are your kids?
Wait
I'm
a
like,
minute.
Uh,
Yeah, Ryan, my son, he's the youngest, so he's 10. Riley just turned 12, and
Aw.
yeah, they're fun. They keep me busy.
Oh, yes.
So, yep, those are my kiddos and my husband and our dogs and our chickens and,
Your property
and
you
our
live
property.
on.
Oh, my gosh.
we're
it's
up in
just so
Cameron
busy.
Park, which is like absolutely gorgeous up here. You've
I
lived
love
here
it.
for a long time, right?
I've been here for 8 years now.
Okay.
I was just talking to my kids about this yesterday in the car, that I can't believe we've been up here for 8 years.
Where were we at before?
Well, we grew up in the Bay Area, out in San Jose.
Okay.
So we
Huge
lived there,
difference.
big difference. And then we kind of bounced around a little bit in the Tracy area, then moved out into the Plymouth Lake area, and then finally moved up here, which we've always known we wanted to live here, which is crazy. Even when we lived in San Jose, we knew we wanted to live up in this area. And I think when you are trying to make a move like that, we were wondering, how the heck are we going to do this?
Yeah.
How do you get a job? How do you move everything? But everything just
Kind of worked out.
fell into place. So.
But I know your husband, he does like more construction type stuff, right?
Yeah. So he works for an underground electrical company right now, and he's a jack of all trades. He does commercial driving, and he does construction. He has a general contractor's license, so he
I
does
remember you're
everything.
like, we're adding on to our house. And I'm like, my husband literally can't change a light bulb.
We're not adding on yet. I'm trying to convince him to do that.
Yeah. Well, if he's listening, do it because her plans sound amazing. I'll do a little plug for you.
Yeah, great.
So, okay, you moved here 8 years ago. Is
Yep.
that when you got into the industry?
No,
Okay.
I actually got into it in 2004. I'm totally going to age myself, which I'm really sad too that I'm now at that age where I can say I'm going to age myself.
I'm not
there.
ready for that.
I'm there.
I'm going to age myself.
Yeah, we actually, we were buying our first house, and we were buying it in Patterson, and I worked for an orthodontist actually at the time. And when we were doing all of the paperwork and going through everything, the processor, this is going to sound really bad because I don't mean it to sound the way it's going to come out, but the processor was doing my income wrong.
Oh, gosh.
And so I called the loan officer and I said, I'm looking at my paperwork and that's not how you calculate the income. So I
"Do you want a
went
job?"
through it, literally.
Oh, my gosh.
They called me
Yeah.
back and said, we're looking for a new processor. Do you want a job?
Oh, my
And
gosh.
we closed on our house. I think it was like 4th of July weekend. And literally the following week, I started my new job as a processor.
Did you take the other processor's job?
No.
They were
I
still there.
started as a junior processor because I was totally new.
Yeah, you knew
I was an orthodontist or worked in an orthodontist office. I was their office manager and did treatment coordinating for them. Young, right? At 19. And so then no, I'm lying to you. I was like 23 at that time.
A
Anyway,
couple years different.
But so I started as a junior processor and then moved into processing and then moved into being a loan officer. I think about a year later after starting that company is when I got my license and then was a loan officer.
Yeah. Well, I think when I met you, you were doing both, I want to say. 6-7 years ago.
Gosh, I don't even remember.
I just remember you were like, yeah, I help here, but then I also do my own loans.
Yeah. Well, actually, I wasn't processing, but I was helping other loan officers because they were swamped or
Maybe
whatever.
that's
It was
what
the
it
owner
was.
of the company. So then I would
That's
help
right.
her. Yeah. So then I would help her on some of her loans, ones that she couldn't, maybe get to, or she just needed some help. So basically kind of partnering up on them.
That's yeah, because I remember that. I don't know why I remember you saying that. You're like, I do that, but then I remember, why I remember, because you were like, I'm taking the leap of faith. I'm doing it all. I'm just going to work on my own.
You're
stuff.
exactly right.
Yeah, that's right. And
You
then
remember
that was probably 4 years ago.
About 4 years
4
ago.
years ago, and now
where I
look
was
at
like,
you.
that's it. I don't want to work with anybody else. I don't want to handle anybody else's stuff. I just want to jump back in, because I used to do it.
Yeah.
I used to do it on my own several years ago, and then when we moved up into this area,
Starting over, really.
well, it was starting over, but I didn't go into being a loan officer. Then I started processing up in this area in Sacramento. Then that moved into other jobs like processing manager. And then I also worked with loan officers. They called it a production manager. I think they kind of created the position for me, to be honest. But what it was is when loan officers were submitting their deals and they were having a problem with a condition or an underwriting guideline, and they just weren't able to get the help that they needed, I was the person who do it. So they would send everything to me, and then I would go in and fight for the deal, because we were, unfortunately, it might have been declined or what have you.
Yeah.
And so I would go through each guideline and, kind of help them structure it. So
It's kind of, you have like a foot up from a lot of people, because then like the ins and outs of loans, and a lot of people don't ever experience that.
Right.
Or the processing side. 'Cause
Right.
That's a whole,
Right.
I mean, a lot of people say this, and I'm sure anybody who's listening who is a loan officer, it's like, you can't do your job without your processor.
absolutely
It's
not.
nearly impossible. And
No.
I know some people who do it, but
Yeah.
I think they're crazy.
Yeah.
So it's
no,
kind
you
of good
definitely
have that experience.
have to have that person, because those are the people who are doing all the behind the scenes work, right? There's so much of it.
Yeah.
So we need them,
Yeah.
and they are super important. And, the loan officer brings it in and structures the deal, and then those processors, we rely on them for the
Yeah.
So
So it's kind of nice to have that experience to be able to bring into now being a loan officer and doing your own deals.
I think it does, actually. It's nice because now I can structure a deal, or if I put a loan together, it's just kind of done and
know
put
it's done
together.
right.
Yeah. And I'm not trying to pat my own self on the back, but I just kind of anticipate what the underwriter is going to ask for, and just kind of already know those things because I've been through it.
Yeah.
I mean, 17 years of the ins and outs, and yeah, it's been a fun ride.
You've learned a lot throughout
I've learned a lot.
So I know we talked about earlier, we're saying like when I met you, you were at a different company. You've now
Yep.
been with Envoy. It's been
No, almost 2 years.
Oh, say 2 years, like
September will
couple
be
years.
2 years. Yeah, I'm really happy with the move. I do, I miss everyone from old companies. There's been a couple of companies, but I think that this has been a really good move. Envoy, they have a really good culture. They're really fast, which I love, and it's kind of like not no brainer, but you really don't have to think about a lot as far as where is my file or what's happening or what's going on. Underwriting turn times are super fast, and it's pretty easy with underwriting as far as, there's not a lot of unnecessary conditions, and it's just been a really, really nice move, and everybody here has been great, and I just love the people that I work with. So
I know when I saw you, you're like, yeah, I'm making a move. And I'm like, what?
I was so nervous.
You were so nervous. I think it was at a golf tournament.
Yeah.
You were like, yeah, I'm submitting my computer. Like, I was like, wait, what is going on? But it sounds like, just from when I met you to now, like you're doing amazing, because you have your own office here in Cameron Park. And then you guys also have an office up in Placerville.
Yep.
Because I know that's like, we were talking about that, if you have clients up that way, with that landscape and what's going on in these areas, it's so nice to have offices in both places.
It is. And then we've got, Amber is up here with me, and so it's nice to be able to see her occasionally. And
she's wonderful.
if we're in that office, great. Like exactly how you said, if I have a client that wants to be in Placerville, sometimes you get people who are up the hill and they don't want to go past Placerville.
It's only 20 minutes.
Exactly.
That's a long 20
but
minutes.
it is a long 20 minutes. Or even if they're coming from down the hill, so if they're in Sacramento, they don't want to go past Cameron Park most of the time, which is understandable.
From Sacramento, it's funny. I'm like, it's such a long drive, but once you get going, it's like not that bad.
Yeah, it's nice.
I love it up here. This is honestly one of my favorite places to visit.
I love it.
I know for us in insurance, we do deal with the high fire type things that we're dealing with up here. How does that affect you and your the loans that you do, or the buyers that you're helping? What do you see? Obviously the premiums are expensive, but what do you see like with the loans that you're dealing with?
Well,
up here?
premiums are expensive, but honestly, it's just anticipating what the premium's going to be. So
Right.
anytime we have a transaction that's going on where it's Placerville or above, it's an automatic of, okay, let's start looking at the fire insurance. I mean, I generally go out with a $5,000 to $6,000 annual insurance policy because you just have to. With the fire and the personal liability, that's just what we're seeing now. So it's really important to be proactive about that and make sure that you've got, all that taken care of in your numbers, so you're qualifying with those numbers, right? So it's just letting the borrowers know too, because a lot of borrowers, they don't understand and they don't know what to expect with that. So
Especially if they're not from here.
Exactly.
And I mean, obviously, I'm not from here, but I've done this job long enough that I know it. But I will talk to first-time home buyers who come up this way because it's cheaper. They're like, oh, I can get a home for, $100,000 less than I can in Roseville or wherever it may be. But there's a reason. It's because that insurance is really expensive. And, in Roseville, we're paying $70 a month.
Yeah.
You're looking at paying $500 a month.
It's a lot.
It's a big difference. So does that affect the loan in any way? Like, do you so I remember when the fires happened last year, well, the last few years, one thing we saw was underwriters were saying we need to go make sure the house is still standing before we lend on it.
Yeah.
I mean, do you see that? Not too much.
No, not anymore. Yeah. I mean, when it was happening, absolutely, we would get notices and, we've got to make sure that everything is still good, but no, not anymore. And, we're always going to anticipate that though. When fire season starts hitting, okay, how are the fires looking? What's going on? It's just our new norm. That's what we're dealing with. So
I know for me, anytime I see a fire, I'm like, oh gosh, tomorrow's going to be busy.
Right. I was in Chico last weekend and I saw on Facebook or something, whatever I was on, that there was a fire. I think it was out in, Pilot Hill, and oh my gosh, I'm like, no, not already.
No.
Please don't start yet.
Well, it's such a dry year, so it's like that's what we anticipate. And I know on the insurance front, it's like we know what to anticipate, but on the loan side, it's tough. You're up here, you live up here, you know everything about this community. But when we have lenders who don't, who maybe, and it's nothing against them, but maybe they have a buyer who is buying up here, and they don't anticipate that insurance being that expensive.
Happens all the time.
All the time. I see it constantly. They're like, what? Why is it so expensive?
Even when I talk to clients who are maybe working with another lender and the lender is just out of the area, and then the agent ask them, would you please give her a call, whatever. So if I'm talking to them about it and then I tell them about the fire insurance because they're telling me their payment's so low and I'm like,
there's a reason.
Well, I can guarantee you they're not factoring in a California Fair Plan policy. And then they're asking, well, what is that? And this is what it is. And, and it's just it's unfortunate because this is, like I said, our new norm, and just not everybody knows about it. And so it is important to use lenders who are local, use agents who are local, just because we know the ins and outs of the area. So you're not surprised by anything.
It's like not anyone can come up here and do business.
Yeah.
It's very different. And I find for me having to have those difficult conversations with buyers who hadn't been made aware by their loan officer or their agent, whoever is referring, I always walk that line. I'm like, okay, I want to be honest with you because I want to tell you what you're going to be expecting. Yeah. But also, I don't want you to be scared that you're not going to be able to afford this house, but like there might be a possibility you can't afford this house because of me.
Exactly.
Like, I'm sorry, that's just the nature of it.
Yeah.
So that's why I felt like it was so important to bring on a lender that deals with these areas because, we did have an agent, Taylor, on here that sells up here, but it's just different on the loan front because I will say Taylor is really good about asking for insurance like before they even get into contract, just so those buyers aren't like getting their heart set on a house to realize it's going to be $6,000 a year.
Right.
But the loan side was something we didn't really talk about because she doesn't deal with the loan. So it's kind of nice to hear your perspective. Like, hopefully it doesn't affect the loan too much as long as you have a loan officer who's educated in that area, understands it, and should be good.
Exactly.
Yeah. So what are you thinking of our current market? I know, I live in Roseville, so I go to Chico, I go to Modesto.
Yeah.
Everyone kind of says the same thing. So I'm going to anticipate your answer to be similar to what I'm thinking. But like, what is the market up here? Are you seeing 20 plus offers on homes right now?
My gosh, hands down. Ugh. Hands down. 45 different offers within a 24-hour period of time. It's insane. $65,000, $100,000 over asking price. Oh. And they're paying cash. And, in some ways it's good, obviously, because it's great for me. I've got nice equity in my property.
That's how I feel.
But on the flip side of it, it's detrimental to a lot of buyers because we just cannot get into contract. It's been a struggle with so many of my clients. And that's unfortunate because, they really are, so many people are looking for homes. So the inventory is just low. And then
it's
prices
sad
are.
because I read this on a mom's page that I'm on, and it was kind of cute. It's like a Roseville mom's page. And this girl posts, she goes, if you're selling your house, can you please sell it to someone local? Because I'm getting outbid from Bay Area buyers. And it's interesting. I would be curious to see like statistics on like how many Bay Area buyers are actually coming here offering cash.
Right.
Because we've seen it in our neighborhood a
Yeah.
lot. We
Yeah.
talk to people moving in and we're like, hey, are you guys from here?
Yeah.
No, yeah, we just moved from the Bay Area.
I had a client who offered her, and she had the strongest offer. We were told that. Strongest offer. The only concern was the appraisal. And she was willing to come out of pocket with a portion of if it appraised low. But, the agents did their due diligence, and they really felt confident that it was going to come in close. If it didn't come in, it was going to come in close. And my buyer was perfectly fine with it. No problem. I can pay the difference if it comes in at this amount that you are, pretty confident that it will. And they decided, you know what, we've got a cash offer right behind you. It's not as good, but we're just going to take it.
That's horrible.
I know. And the hard part is you don't know. I mean, we all say Bay Area buyers, but we don't know if they're all Bay Area buyers. But we do have a lot of cash offers going on, or those who are willing to go so far over, and they just have that extra cash to be able to pay the difference if it happens to not appraise.
And do you see that a lot? So like, are appraisals coming in so much lower than what houses are being offered?
I have to be honest. Appraisals are kind of all over the place right now.
Really?
I feel like, on some houses that you feel, oh yeah, no problem, totally going to come in, shouldn't be any conditions. It came in undervalue. And then another appraisal, you're thinking, oh my gosh, I don't know if that's going to appraise. And it comes in spot on or even above. So it's kind of a tough market, to be honest, to figure out where exactly is this going to come in. Zillow is no. I mean, we all try to go off of Zillow, but Zillow, no.
Don't do it.
Don't do it.
They say my house is
Stop.
worth like $150,000 less than it is. I'm like, ugh.
And that's the thing is sometimes you get under and sometimes you get so far over. It's crazy. So it's really hard to determine that. That's why it's really, really important to have a really good agent who is going to do the work. I mean, I have great agents that I work with that I can pick up the phone and say, hey, I need to narrow this down. Even if I'm doing a refi for someone, I really want to narrow this down for them to be sure they're looking to get some money out. If the lower your loan to value, the better your rate's going to be. Right. So let's just try to narrow this down. It's really important to have those agents, to be able to help you with that.
Pocket.
Yeah, so they can do the comps and get all that info for you.
Are you seeing I know we could talk rates, like with rates being so low and refinances just booming, I know it's kind of
slowed up a little bit.
Slowed.
Yeah.
But are you seeing a lot of appraisal waivers on loans?
Oh, yeah. Yeah.
It's just they're like, no problem, it's worth that.
Yeah, I've been able to get so many appraisal waivers, which
is great.
It is great, but then I feel bad for appraisers.
Yeah.
I feel bad for everyone.
I mean, I think they're probably doing okay.
They probably are. But appraisal waivers are fantastic. They make it so much easier and so much faster. I mean, you can close a refi in 10 to 15 days. It's just done. So that makes it really nice. And as long as you are reasonable in your value, right? Because an appraisal waiver is all determined on what I enter into the system and I run it through that automated approval. Yeah. That's what gives me my waiver.
If it comes in.
If I'm going to put an astronomical amount, it's going to kick it back and say, yeah, right, try again.
Yeah.
So I'm going to put it back in and I'm going to get those comps. I'm going to look up the comps. I'm going to pull the property profile. I'm going to go look to see what is sold recently, what's, give me an idea on the value. Yeah. Reach out to an agent if I need to.
Get a reasonable value.
Yeah. If it's a reasonable value, then 9 times out of 10, and your loan to value is lower, right? You can't be at a 95%, 90% loan to value.
Your rates will just be.
Well, the rate is higher, a little bit higher on that, but usually on an appraisal waiver, they want lower loan to values.
Which makes sense. Yeah. Make sure it's adding up.
Yeah.
So with rates, I mean, I know 4 or 5 months ago we were at super low.
Super low.
And now where are we?
We're still great.
Yeah.
That's the thing. We're still great. I mean, when you're talking about a rate of 3%, 3.25%, that is still a fantastic rate. Oh, yeah. I think when I bought my first house, which I don't even remember the year. No, it was 2004. Duh, when I got into the business. 17 years ago when I bought my first house.
Here we go, aging myself.
Oh my gosh. I think my rate on my first was at 6.25%. Oh my gosh. And then it was an 80-20 loan. So we did a first and a second, 6.25% on the first. It was probably a good 10% on the second, I'm thinking. Wow. I mean, when you think about it and think about what everyone's gone through. Now, higher rates on higher loan amounts, obviously it gets a little dicey, but rates are still great.
I had a client tell me, he's like, yeah, I'm going to actually refinance and pull cash out, even though I don't need it because the money's so cheap. I'm like, I mean, that's fine. He goes, I'm going to invest it. I'm going to invest it somewhere else because I know I can make money on it. I'm like,
well, there you go.
He's not wrong.
Well, there you go.
The interest rates are so low.
They are. And even on cash out, they are.
Yeah, and I know people are like, oh man, we're in a bubble. It's going to burst any day now. What is your opinion on that?
I really don't.
I hope not.
I mean, I don't think it's anything like the crash, right? I don't think it's going to be anything like that. I definitely think we're going to stable out, and we're probably going to come down a little bit. I personally feel like this is our new norm. This is just where we are. I mean, look at over the years, the trend.
Yeah.
It just consistently rises, right? And we're definitely at a peak. So be prepared for a valley, but I don't think it's going to be anything.
2008, 2009.
No, I don't think it.
Well,
I don't think so.
I don't think so either. And I think a lot of people's fears who aren't invested in our industry, who don't listen to things going on, that have been going on, they're not aware of the things that have changed in our industry. I know even just as far as I've been in the industry, TRID, just all these different things that have come into play to make it to where, I mean, correct me if I'm wrong, make it to where it's a little bit more not as risky. It's a little more we're going to do our due diligence to make sure you're pre-approved correctly. We're not just giving you a loan by you telling me that, I make $500,000 a year. I'm not even going to verify that.
Nina's, no income, no assets, stated income. I mean, those are all gone.
Yeah.
You're not going to get those loans unless you're working with some type of private investor or a portfolio loan where, a company's making their own specific loan, which I haven't even seen a stated or
somebody
like
say
that.
Something about a stated income and loan, and I was like, what? Don't say that.
Please don't. Sometimes stated is good because you do have a lot of self-employed borrowers. Right. Self-employed borrowers, we all know, make more money than what they do on paper. Right. Everybody knows this.
Yeah.
So that kind of makes it more difficult. But there are bank statement programs. So you can give 12, 24 months of your bank statements and you add up those deposits and you're able to use 50% or so of those deposits depending on which type of program you're going with.
That's good.
Yeah. So that helps self-employed borrowers. But for the most part, you're exactly right. It's everyone doing their due diligence and we are documenting. You've got to verify. And that's just the world we live in. But it's not hard. It honestly is so easy. Everyone's so concerned and so scared about how to do a loan or, they're scared to take that first step. But that's why I and other loan officers are here because that's our job is to hold your hand. And it honestly is so easy to do. It's a couple of documents, send it in, and we do the rest of the work for you.
Yeah,
and
sure
then
you're qualified for what you
Exactly. And if we can't do it now, okay, well then what's our game plan to do it in 6 months or in 12 months or whatever the case may be. So. Yeah.
Which is good because I think you're right. A lot of people, and I brought this up, I think in one of the very first episodes we did on here is I'm a millennial. My parents, luckily weren't affected by the crash because they were both blue collar workers.
Right.
But you saw a lot of people my age, parents lose their houses and lose everything they had. And so as, an outsider looking in, we're thinking, is it safe to buy a house? Oh my gosh, why would I invest all this money into a house when I saw my parents lose everything?
Right.
I couldn't even imagine.
Right.
And I think that's a mentality a lot of people have. And
Absolutely.
So it's good to have that hey, I'm here. I can show you. It's super easy. We're not going to put you into something that you can't afford.
Right.
Because I remember the first time I got pre-approved for a loan, it was, here's what you can afford. I'm like, wow, okay. But here's going to be your mortgage payment. I'm like,
exactly.
Oh yeah, no, I don't want that mortgage payment.
That's so funny you say that. I start out every conversation that way. What is your maximum payment that you're looking for? Because you may qualify for a $600,000 house, but you're not going to want that payment.
Yeah.
So tell me what your max payment is that you are looking to have with, give me the information on your down payment, and then I'll tell you where your purchase price should be.
That's how people should do it.
Where you should be looking, because then you just don't look at the Taj Mahal.
Right.
You go and look at, okay, this is what I can afford. Yeah, and Dave Ramsey would be very proud of you if you stuck with what you can afford.
Wouldn't he be really proud of me that I didn't buy the car?
I'm so happy you did not buy that car.
So I was going to buy a car, and I showed Tami, and she about fainted when I showed her the sticker price. She was like, you can't do that. And my husband does accounting, so I know he felt the same way.
You're welcome, Nick.
Happy wife, happy life.
You're welcome, Nick.
Thank you. He's like, Bree, do we really need that? So yeah, Dave Ramsey would be proud.
Yeah, Dave Ramsey would be so proud. I'm on a kick with Dave Ramsey. I told you this last time you were in here. I am on a cash only kick now.
That's so good.
I want things paid off. I want my house paid off by the time we're 55. I don't have a car payment. I don't want a car payment. I feel like I'm going to drive my car into the ground.
Good.
Because I'm just done with bills.
Well, and it's like, for
I
what?
hate it.
I think that's what Nick, my husband and I come up, like we talk about a lot. It's like my husband's very anti-credit. Like he does not, like he panics when we have any money on credit. He's just like, oh, like get rid of it.
Yeah.
And it's interesting because I don't think a lot of people have that mentality. They're just like, whatever, free money, you know, it doesn't have interest. But then you rack up 10 grand and you're like, hey buddy, free interest is up. So okay. And
you still owe it.
Yeah, you still owe it. It's not free. What'd you buy with that? So I'm with you. Like it's so good to be in that part of your life where you're like, okay.
It is, but it's hard because there are things that I want, of course, that I can't have because I'm trying to stick to my guns. Yeah. You know, it was really close where I was like, come on, babe, we could get this. Come on. And he looks at me and says, didn't you want to pay for cash for everything? So then he tells me, go close 5 more loans. Then we can buy it. And I'm like,
I mean, now's the time. I would say it's probably the busiest time of most people's careers.
It's so busy.
Which is so good.
I know. It is good. I feel, I don't know if you've noticed, I think I've said I feel bad and feel guilty a lot. I do feel guilty last year because so many people lost their jobs and so many people are struggling due to COVID, but the mortgage industry and the real estate industry has just, oh my gosh, taken off. And so last year was a great year, and this year so far has been a really good year. So,
and it is unfortunate with COVID, but I do feel that you and a lot of loan officers I've talked to were able to help a lot of people.
Absolutely.
Where it's like, you know,
and you give back.
Yeah, and you refinance and you're like, oh my gosh, I can skip 2 mortgage payments. You don't even understand what that would do for me.
Yeah.
And, you know, the 2 months that it may be. So, you know, I get where you're coming from. You don't want to be like, oh man, I made all this money. It was such a great year. And then other people are just crumbling, but you help so many people along the way.
Yeah. And the great thing about Envoy is we actually just did a mortgage giveaway, and Amber's clients was actually selected. It was so awesome.
Oh my gosh.
Yeah. So they got their mortgage payment paid for a month, I believe. It was what it was, which was awesome. He was a veteran. Yeah. She was on the news and everything. It was pretty cool.
Oh, I'm going to have to ask her about that. That's amazing.
Yeah.
So I guess we'll wrap it up and just like say one. I know I told you we could go for like hours.
I was so nervous. I'm like, let's keep going.
I know it's like everyone gets nervous, and then it's like once you get to like talk about your story and like how you got into this and really like and just get involved in everything, it's easy to not want to stop.
Speaking of getting in, just one quick story. I was thinking about this, kind of a crazy thing, and I'm going to get totally cheesy right now because I kind of really feel that I'm where I'm supposed to be as far as my job. I've been doing it for 17 years. But before I was even in it, I was probably like 18. My dad always was hey, let's go here and, okay. My dad was like a get rich quick kind of guy. Yeah. Okay. That was my daddy. So he always was looking for things, right? So one day I was 18. He's like, come to this little seminar with me. And so I went to this thing, whatever it was, and it was a meeting full of all these older people. And here I was, this young 18-year-old. It was about mortgages. It was about doing loans for some company. I mean, it probably was not legit at all. Yeah. I guarantee it.
Get rich quick.
But I went back to my orthodontist office, and I'm telling the doctors there, like, oh yeah, I could do loans now. I can do this. I can do that. You know, of course I knew everything.
Yeah, we all did at that age.
I think it's interesting that fast forward 4 to 5 years, and then I got into the business, mortgage. And then this is just where I've been ever since.
And it's your career now.
It's my career, and I don't think I'll ever leave it.
Yeah,
so.
I think a lot of people say that. Even people who are close to retirement, they're like, I don't know that I would ever actually stop doing this. I would still do it, but maybe just not at the level they're doing it now.
Exactly.
It's like it's such a good job, and for me personally, this industry as a whole, for family life, for all of that, it's just really, really helped me just, have that flexibility. You can go pick your, you have to go get your son. You can go pick up your son from baseball. You can go do these things with your family, yet still help hundreds of people get into houses.
Right.
It's just so awesome.
Yeah.
So why don't you give us your information, either if you want to do email, phone number, whatever the best way somebody can get a hold of you.
Yeah. So Tami Moreno, and it's Tami.Moreno@envoymortgage.com. Tami is Tami.
Oh, yeah.
And my cell phone, 530-334-0839.
And I want to say I've always pronounced your last name Moreno.
Everybody does. I didn't even correct you in the beginning.
I was like,
Everybody does.
Well, that's interesting.
Even at my kids' school.
Because it has an E, right?
But it's the Spanish version.
Okay.
Moreno. It's not Italian.
Oh, I like that. I don't think I've known you for a long time.
I know.
I'm sure everybody probably does that. Correct me. Well, thank you so much for coming on. I had so much fun. It's good to learn about how you got in the industry, a story I never had heard. So that's exciting.
Awesome. Thanks so much.
Thank you. Thanks for listening, and I hope everybody has a great day.
Bye.
Bye-bye.